Welcome, this is Wayne Blau with another smart profit maximizing moment. We're in the middle of November of 2019. We're in prime tax planning time. Met with somebody yesterday, saved him $28,000. Not bad. Yeah, it doesn't sound like a lot, but can you use an extra $28,000? He was happy. I mean, it's simple as that. Going to talk today. Let me do a better job introducing myself. My name is Wayne Bilal. I'm a local CPA in El Paso, Texas. I'm missing my Tessie today. She stayed home because I'm going to a client's real fast after this. So sorry about that, folks. Anyways, I'm, like I said, founder of a CPA firm in El Paso, Texas since 1991. Creator of the Smart Profit Maximizing System and soon to be author of Hidden Profits, which talks about the ways you can find profits hiding in your business. Be talking about that a lot more in the next 3 to 6 months anyways. Tax planning. I'm going to talk about 33 tax tips that save business owners thousands of dollars every year. I'm going to run through them pretty fast, but they're going to be posted on my blog, okay? Look, you can use these, feel free. Understand, I'm not your CPA. If I am, great, call me and I'll put together, a tax plan for you and we'll work it out. But make sure you get with your tax planner. Don't assume that these will work for you 100%. There's a lot more than what I'm going to cover in the next 5 to 10 minutes. It really is a lot of detail, and you got to make sure that you know what you're doing, and that's the best choice for you. All right. I've seen all kinds of things. I've seen a client who set up their business using the wrong entity. This increased his taxes by thousands of dollars every year. By simply correcting that, we saved him and his partners about $45,000 every year. And that wasn't just a one-time savings. That restructuring will continue to save them money every year as long as they're in business. Say they stay in business for another 10 years. That's almost $500,000. It's $450,000 that they didn't pay the IRS. All right, in 20 years, that's $900,000 that he would have otherwise had paid the IRS just by having the wrong business structure. I'm sure we can all find something better to do at $900,000 in 20 years, or $450,000 in 10 years, or even just $45,000 this year than sending it to the IRS. All right, here's a bunch of other things we can do. All right, first, know the basic rules of income tax liability. Find out what's non-taxable and figure out a way to earn as much of that as possible. The general rule is if you can't find a place in the code that says it's non-taxable, it's taxable. It's really that simple. Same thing with expenses. If you can't find a place that says it's deductible, it's not deductible. Right? If you get with a good tax person, they can usually arrange your finances in a way that works. 2, shift income to later years. This is normally a good thing. It's just deferring, but if at all possible, shift it to later years. I'm not going to go into a lot of detail. If you want to read a little bit more, go to my blog. The easiest way to get there is wjb-cpa.com, my own website, or search for Wayne Bilal CPA blog. Anyways, on my website, wjb-cpa.com, there's some tags across the top. The left-hand side says blog. Click on that. You'll find this article. There's a search button. Search for the 33 tax tips. Number 3, accelerate deductions. Look at what you pay and see if there's a way to bring deductions forward. Simple things like paying January's rent December 31st. Simple things like that. Use a credit card to pay deductible expenses before year end. That's kind of cool. Most of the time you have to pay the bill, but credit cards are different. If I charge it, even though I pay it 6 months, a year, 2 years later, it doesn't matter. I get to deduct it in the year I charged it. 5, if you expect your income to be higher, reverse what I just told you. All right? Just accelerate income, delayed deductions. Tax planning should be over a 2-year period. 2019 and 2020 is what my tax plans say. Shift income to taxpayers in lower tax brackets than you. This is going to be between you and another family member or by establishing a C corporation. Don't establish a C corporation without getting help. Make sure it qualifies for you. And be careful of the kiddie tax implications. 7, turn after-tax expenditures into tax-deductible items. I once had a boss that said everybody should own a peanut stand. What he was trying to say is everybody should have a side gig, a side hustle as they call it nowadays. Because a lot of times you can take things that you normally do like your cell phone, your subscriptions, or other things and deduct them. Get help, do it right. I know I'm going to say that a lot, but I mean it. That's why I'm repeating it. 8, take advantage of as many adjustments to income deductions tax credit as possible. There's no real magic trick here. You must know what is available to you. tax preparers are not mind readers. We're going to ask you a lot of questions, but you might have something out of the ordinary. Believe me, there's hundreds of thousands of tax deductions. We can't just put all of them on your tax return. No client is going to sit still long enough for us to ask those questions. Okay. Now, another thing to understand, when we're doing a tax return, we're in compliance mode. We're just putting history into the forms correctly so that you get a good, proper return and don't get surprised, all right? Tax planning is totally different. Put a different hat on and figure out a way for you not to pay more. Number 9, we already talked about, choose the right entity. 85 to 90% of companies are set up as an S Corp. There's a reason for that. It eliminates double deduction, but there's a lot more reasons for that. It can save a lot on Social Security. Get with somebody who knows what they're doing. 10, hire family members. You're most likely going to pay your children an allowance anyways. My kids started cleaning the bathrooms and doing janitorial work starting at about 9 or 10. All right, I didn't pay them a hell of a lot, but I paid them something. And then as they got older, they started working with me and doing more. My daughter now works with me full time as a tax preparer. She's an enrolled agent, which is a tax designation from the IRS. There's not very many of those. Number 11, set up a medical reimbursement plan. If you're going to have a lot of medical expenses, this is something you can look at. If that doesn't work for you, you can look at an HSA, a health savings account. That's something else to look at. That's number 12. Number 13, take advantage of the home office deduction. It's probably the most misunderstood deduction in the entire code. For years, the IRS used this as a red flag. Not as much now, but you need to know the rules. All right, so get with a tax preparer. Again, I'm saying it. 14, consider renting your home to your main home or vacation home to your business for fewer than 15 days. If it's 14 days or less, your business gets to deduct the rental, and you don't have to report the income. I have one client who holds meetings there every month. All right, so with his managers, and he pays a reasonable rent, nothing dramatic, okay? And they do their planning and all that garbage with it. 15, document all your deductible business meals. Simple as that. If you're audited and you don't have the right documentation, you're going to lose it. Simple as that. 16, pay property taxes in December, not January. El Paso, the taxes are due January 31st. You might want to make sure you pay them December. Again, need to know what you're talking about. Personal taxes may not help you as much because of the $10,000 limitation that was put in place in 2018. 17, look at creating a retirement plan. Bonus yourself through the business and then deduct that income from with a simple, is one simple, pardon the pun, a simple way to do it. You get the deduction, it lowers, if it's an S Corp, the income to you, and the added to your W-2 is not taxed except for Social Security because of the simple. Look at year-end hiring. There's a lot of different ways you can do it. The health insurance credit is one of them. There's other credits for hiring. Number 19, if you're going to buy equipment, do it before year-end. Section 179 expense, and it's really increased. Number 20, bonus depreciation is huge in this tax plan between 2018 and 2022. You can claim 100% bonus depreciation. This is up from 50% in 2017 and now applies to new or used. It used to be just new. 21, if you're considered buying a vehicle in the near future, do it before year end. Same with any equipment. If you're planning on buying it in the near future, do it before year end and deduct it. Business cars have different limitations. Get with your tax preparer. That was 23. 24, calculate your auto deduction using both the cost method and the mileage method, and use what's better for you, and make sure you document it, okay? 25, if you have losses in a partnership or an S Corp, be sure you have basis to deduct them. Make sure you have enough investment to cover it, all right? Get with a tax preparer. That's basically, your tax person can explain this to you a lot better. 26, look over your receivables if you have a company, write off any bad debts. If you're on the accrual method, can't write it off if you're on the cash method. 27, look at your old inventory and write it off. Make sure you normally can lower it, you can take your inventory and value it at the lower of cost or market. So if I bought something for $100 and it's been sitting on my shelf forever and I'm going to have to cut the price to 70, that's what the new value is for inventory, and I get to write off the difference. Again, tricky, get with your tax preparer. 28, look at donating old equipment or old inventory you no longer use. You can write off 1/2 of the difference between fair market value and your remaining basis, which is your original cost less depreciation. Again, get with a tax preparer, but this is a nice one. You got stuff sitting on that one guy gave away a bunch of toner to schools that could use it. So, you know, he got a nice deduction on this, and he got his inventory out. At least he got something since he wasn't able to sell them. Don't forget the new 20% business deduction. Starting in 2018, only 80% of your qualifying business income will be taxed. Huge break for small businesses. If you own a profitable business, you definitely need to get with your tax advisor to ensure you don't miss out on this valuable deduction. Especially if your income is high, there's phase outs, and if you're close, it's a cliff. You know, $1 over, you lose it. So there's ways to play with this, all right? Number 30, the Trump Tax Act created a new tax credit for wages paid to employees on Family or Medical Leave Act. You might want to look for it. This is only for 18 and 19, then it disappears, okay? So far, things never really, seems like they always get extended. There's still stuff being extended from 2010. 31, the new tax law eliminates the employee's ability to deduct 50% of meals and entertainment that you pay out of their own pockets. If they own their own vehicle, that your employee's ability, okay? They can't deduct it anymore. So if they're doing stuff for you, you might want to have you might want to create an accountable plan, which means they turn in receipts to you and they get reimbursed and you get to deduct it. And there's a lot of ways. I had people that didn't want to do that because they're outside salespeople, so we just had them adjust their commission for their expenses. Everybody works out, everybody wins. 32, switch to the cash basis of accounting. Business owners prefer to use cash basis for tax returns because it's simpler and you don't owe taxes until a customer pays you. Under the old law, C corporations could not use the cash method if their average gross receipts for the last 3 years exceeded $5 million. That was increased to $25 million, all right? So something you ought to look at. Personal service corporations, most pass-through entities can use the cash method without regard to their gross receipts. Finally, abandon old assets rather than selling them. This can turn a capital loss that's limited to $3,000 a year to 100% ordinary loss. Be sure to check with your tax preparer to get all the right things. I know I said check with your tax preparer about 100 times. Probably not that many, but a lot. You heard it a lot if you listened to me. So it's really very simple. Get with your tax preparer before year end. Buy some of his time. It'll save you money. I don't even do a tax plan unless I guarantee it, that I'm going to save you 4 times what you pay me. And it's usually, like yesterday, it was 10 times what he paid me. Okay? So there's nothing here. There's no reason not to do this. Hey, this is Wayne Belisle. Until next time, saying let's make this our most profitable year ever. And once we make a profit, don't send it all to the IRS. Thank you very much.